Humpy, you're moving the market, brother. Today in this video, we're going to be talking about my current thoughts on Trump's tariffs. The market is going up and down like crazy. People are sending a lot of questions my way. What my thoughts are. How should we be thinking about all of this? Right now, the S&P 500 futures, they're down. You can see 3.59%. So when the market opens up tomorrow morning, it should be down roughly around 3 to 4%. So yeah, the market, it's going. It's volatile. I think one of the best ways to describe it is it's like, when you make a double shot espresso in the morning, then you leave it out, you go take a shower, you go come back to it, but your French bulldog, it's drunk the whole thing. So that French bulldog with that muscle mass, small little body though, it's jumping up and down like crazy. So that's how the market is moving. Okay. Now, overall though, if we go and check out the charts, this is nothing out of the ordinary, right? So I think the mindset should be, hey, the market likes to move in a zigzag formation. That's what it does. And right now, as the market comes down cheaper and cheaper and cheaper, our mindset should be we are getting closer to better and better prices, which means our conviction should actually go up. Okay. So I like to just refer always back to the chart of financial freedom. All right, here it is, the road to financial freedom charts. Take a big look at this. So we've got every single video is pretty much referring back to this chart. And you can see like the red solid line, it's somewhat expensive. The white dotted line in the middle, that's fair price. And the green solid line is where it is cheap. And then you've got the green dotted line at the bottom. That's like out of the blue. Like you really barely ever get down there. That's like a bargain of a lifetime. Last time we got down there was in 2020 with the COVID crash, and we were down there only for like a split second. And I've drawn in the top range here where it's really, really, really expensive, and that's like a bubble. Okay. And we haven't gone there in the last couple decades. So I think we really need to evaluate and look at ourselves as investors. When the market goes down further and further and further, it's really difficult because we see our net worths, they go down as well with that. But the cheaper something becomes, we have to think, oh, that's actually a better deal for us and will set us up for the long term. Like whenever we're following like a dollar cost averaging strategy, if we're buying in at the lows, when the market does revert back, and I believe it will, because the market, I think the best way to think about this is in terms of psychology, right? So my thoughts with the tariffs right now is, hey, I'm not an economist. I don't really have an opinion. And there's going to be something that comes up every single month. And you kind of, as an investor, you really, you're never going to be an expert on that new thing that comes out, right? There's going to be another thing next month. There's going to be a thing a month after that, like even with COVID, that was a really prime example. Out of all of us, are we experts on viruses, right? Do we actually understand how it works? Do we understand how it's going to impact the economy? Then you have to forward predict what every government's going to do. And it's like, it just gets to a point where it's not really possible. Okay. But what I like to think is in terms of psychology, every wealthy person has their money, most likely, a large, significant portion of their money in companies. Okay. So if they have their money in companies, and a lot of them have a big allocation to the S&P 500 itself, the top 500 companies in the US, that means in terms of psychology, they are incentivized to make this thing go over the long term. So say with Trump's tariffs, okay, the way I look at it is I forget all about the in terms of what does it mean in terms of the tariffs, in terms of the economy right now in this moment. I want to think in terms of psychology, in terms of Trump himself. So let's start breaking it down. Do you agree, yes or no, that Trump cares about his name and cares about his legacy? Do you agree, yes or no? I believe he does, okay? He loves to put his name everywhere, right? The Trump Towers, big Trump everywhere, okay? So, if he cares about that, then what would he be optimizing for? Every president loves to go down, like end their term, with a high stock market. That's like one of the gauges to see if they were a good president or not. All right, is if the stock market they left the stock market at a high. Okay, so I believe Trump, because he's associated and he's got other. He's built the team of Avengers. He's got Elon Musk whispering in his ear. He's got he's surrounded by these great people. Okay, Trump is incentivized to get the market to all-time highs, not now, but in 3 to 4 years when his term is ending. And I believe if we look at the market right now where it is, it's at what, $5,670. In 3 to 4 years, the market will be much, much, much higher. If the tariffs and all of that are that bad, okay, as bad as the media is portraying it, the market will be below this level in 3 to 4 years. I practically guarantee you that there's 95% odds that the market is much higher in 3 to 4 years. Okay. And a way that I like to explain it as well is most decisions when it comes to, let's say, let's just use it as companies. All right. Jeff Bezos has a saying that a lot of companies, what happens is when there is some sort of decision to be made, people can just think about it for way, way, way too long. But the way he likes to describe it, his analogy is like you got to think about it. It's a door, okay? This decision is a door. Now there's two types of doors. Most doors are ones where you can open up the door, make the decision, and if you don't like it, you can just go back through the door and go through another door, create another door, all right? Very few decisions are a type of door where you go through that door and there's no returning. Okay, it's locked, it's cemented as soon as you walk through that door. So let's say with these tariffs or any decision, what happens if everything just gets reverted back to how it was previously? You can just change your mind, right? Um, if it really is that bad for the economy, I'm pretty sure Trump is then incentivized to take it back. I don't think, you know, he would have such a big ego, whereas like, no, I'm not changing my mind. I think he's proven time and time again that he has the ability to change his mind. He's going to do what's right for, maybe not, you can argue maybe it's not for the people, right? You can argue that if you want. But let's just say everybody likes their own money. Everybody loves their own net worth. Everybody cares about their own assets. Hey, his assets are in this, all right? The US, he's very, very incentivized. That's kind of like why I like a businessman in control, because they're incentivized and it really helps us. Okay. So I believe the market in 3 to 4 years, it's going to be way higher than today. Um, so if you're panicking and all of that because you don't understand what's happening, look at the psychology. What is everybody incentivized for? Most people, unless there's some sort of psychopath, they probably are incentivized for the market to go up over time. And yeah, people are going to make bad decisions. Even if all of these decisions become really, really bad, then what will happen to the stock market? All right, let's just say we do get 3 to 4 years of the market going down. That creates more and more opportunities to buy near the COVID lows, right? To buy when it was once in a lifetime opportunity. And then someone else will get voted in, right? And they're probably going to learn from the mistakes of that previous person and then realize, hey, that was a door that we can just walk back through. So even that new president can change it. Okay. Then what happens? The market will then adjust and get marked up instantly. So what has kind of happened since the tariffs is the market has only dropped from here to here. Okay. The market so far has dropped what, roughly 11%. Okay. And let's just say the S&P 500 is down 4% tomorrow. That means the market is down 15%. And the market is forward predicting. It forward predicts 6 to 12 months into the future. So it's thinking, what are the ramifications of this 6 to 12 months into the future? So when new news comes out like this, then it all gets, it moves fast because everybody is thinking, what does it mean for the next 6 to 12 months? Okay. And the market will adjust very quickly. So if this is the last of the tariffs, then there's probably more and all this stuff coming out, and there's going to be more things that aren't even the tariff related that come out in the next month, the next month, the next month. Okay. Overall, I believe the worst is behind us. And what we need to think about is, in general, the stock market likes to correct for 1 to 4 months. All right. 1 to 4 months. The stock market likes to correct for 1 to 4 months. Most of the time, if we're thinking if we're thinking in terms of data, look at all of these corrections. Okay. Go back and count any correction. Most of them, obviously, there's outliers like this one, but most of them are corrections that finish between 1 and 4 months, like under a quarter. Okay. So everything does come to an end. Everything, like there's always value there. Okay. Remember in our last video when we were talking about luck and coffee, that shit crashed by like 99%. It was all overblown. All right. It was all overblown because there's still value there. Tariffs and all of that does not make these 500 companies worth nothing. All right. And they're not going to be that silly. The market is really smart when it comes to the overall S&P 500 because all the investors, they got their eyes on it. Not like Luck and Coffee. Luck and Coffee was very different because it's an individual stock in China, and it was a double whammy where China's reputation and branding was going downhill because of COVID, and everybody was fleeing from China, and then you got the worst of the worst, all this negative news about Luckin coming out at the exact same time. But no one was really thinking rationally, including myself, in that moment. Luckin was actually undervalued and was one of the best investments in the last couple of years. So that's, I think, the main point of today. Think about the psychology. Understand that us humans, we are kind of self-cleaning just like the S&P 500. You know how I always say the S&P 500 is self-cleaning? Because it is. It's a mathematical formula that kicks out the weaker asset and then brings in the new better asset. So if it's 500th and it starts to underperform, it'll get kicked out to 501st. And then the 501st will replace it. It'll get replaced by something better. It's self-cleaning. Okay. Then the companies themselves are self-cleaning because they're ran by billionaires. Okay. Billionaires run them, and then the investors of those companies are also billionaires. Okay. Everybody's incentivized to make it better and make it go up over time. Now, Trump himself, he's one of those guys. He's a billionaire. We just described him. He's an investor. Okay. Now, in terms of psychology, he's incentivized as well for his name to leave. I believe he's thinking about, dude, he wants to go down because in terms of his age, he's getting up there, right? In terms of his age, he's getting up there. He's ticked off so many things off his, to-do list. It's kind of like his bucket list for life, all of his achievements that he wants to get done in his life. Imagine that. Imagine he leaves with a stock market as strong can be. That's pretty much, he's done it all, right? He's done it all. And let's not forget, like right now, it's like even if you look at Elon Musk, right now, Elon Musk, especially in the Australian media, it's all negative, man. It's all negative. But if you look at the reality, if you don't understand how he's talking, like his tweets can look silly. And it took me like probably a year to understand how he's talking, right? A lot of it is, it's just joking around. It's sarcasm. It's to get more eyeballs. So like it's so easy to criticize Elon Musk. Dude, he's the richest man in the world. You probably don't really get there by luck. Think about like what he's actually done with Tesla. When Tesla was a thing, like starting, it was like a laughing stock, like everybody was laughing at Tesla because no one thought it was actually possible to create an electric car, right? Then everybody laughed at him for creating a rocket company. He's pulling everything off. Everything he touches actually turns to gold. Now he is involved in the government. I'm pretty sure the government's going to turn to gold. That's the way I look at it. I look at the people. I look at the people first. I look at the psychology. I look at the incentives. I don't necessarily look at the economy and try to understand it. Okay. Even though I'm in this space, because the reason why I don't want to try to overthink and analyze the economy is because no one's going to know. No one's actually going to know. Like think about this. When COVID became a thing, right? This was very interesting because when the market was here, it was like around December, so December 2019. I was actually traveling throughout Asia, and I started to see it. Like, I was arriving at these airports, and then you're getting checked, with all those guys in all those safety suits. Um, and it wasn't on the news yet. And then you started to see these articles pop up, but you could see the airports, they were taking it really, really serious. And then when I arrived in Melbourne, I'm like, oh shit, this is real serious now, because even the Australian government. And then, like a week after that, that's when this started to happen, when the market started reacting. It went across the whole globe. Now, before, like, when there was those signs, of those articles coming out, but the market's still moving, which economist came out and said, hey, the market's going to keep pumping for 2 weeks, but there's this thing called COVID. It's going to spread rapidly across the world. Then the government's going to react in this way. They're going to shut down everything. The market's going to dip like crazy, but it's going to be an overreaction. It's going to be a perfect buying opportunity. And if you buy at the lows at around just over $2,000 on the S&P 500, you're going to be rich the next year. No one said that. No one said that. Even, right? Even if we were down here at the bottoms, no economist was saying buy the dip, brother. Dip. She's overblown, brother. This is even extremely weird, because even if you are an expert on viruses, if you look at the numbers, you can get a chart, right? You get a chart of the COVID numbers. They're going exponential, and it's just starting the hockey stick. It's only starting the hockey stick, right? But the stock market is forward predicting it lives 6 months into the future. So it already accounted for all of that. Then it already started to think, all right, what's actually going to happen? Tech is going to be, is going to really benefit from all of this. The economy is not going to completely actually shut down. Like, it shut down compared to normal life, right? We couldn't walk on the streets as much in many, many countries, especially Australia. But that doesn't mean the dollar's proper stop. Spending went up, right? Spending went up. Why? Because people were locked in their houses. Like, shit, I need to spend some money to make myself happy. All right. No economist was predicting all of this stuff accurately. Now, today is no different, in my opinion. Today is no different, because anything can change. It's going to change, all right? Everything will keep changing. Everything will keep updating. There's going to be a new thing next month, a new thing the month after that. So that's why I look at the incentives. I look at the bigger picture. I like to zoom out and stick to the fundamentals. The fundamentals are dollar cost average into this long-term trend. The US is actually strong, right? The US is actually strong. One last note. We have to be grateful. We have to be grateful for last year, especially with our portfolio in eToro. We ended the year with 50%. Okay. It hurts a little bit, because just a few weeks ago, before the tariff correction, we were up 20% on top of that 50. So that was a huge amount. So, like, the eToro portfolio was up $500,000. Okay. It's now retraced most of that. But we still have to be grateful, because why? Look at all of this move here. A lot of this move, I would say half of it, okay? I think the first half was just the market recovering from a correction. That's normal. The second half of the move higher was when it was becoming obvious that Trump was going to win the election, okay? And he was going to be good for the economy, and he was going to be good for the stock market, okay? So then, once it was starting to become obvious, what does the stock market do? It lives 6 to 12 months into the future, so it kept on pumping. The stock market is actually at all-time highs pretty much right now, okay? The stock market is actually at pretty much at all-time highs. So I'm still so grateful for where we are on the position on the map right now. What we should do is literally, all right, today's price, 5,670. Let's just highlight any price action anywhere where the price is higher than where it is now. Let's make it, I don't know, let's make it yellow so it stands out. It's only this, right? So the stock market has only been higher than where we are today. It's roughly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. It's around like 30 months or something, give or take, okay? So that means if we zoom out, What percentage of the stock market is lower than today? It's like 99%, right? That means we're kind of like 1% off the highs in a way. Everything's how you look at it. Right now, the stock market, it's practically all-time high. Why are we scared? Then let's just say like it really does it corrects all the way down to the green. Even then, we should not be scared. Why? Because there's major support here as well. Usually, it happens time and time again where previous peaks, when they're a major peak, like here's a major peak. A major peak, when you break through it, you explode out. So you explode out of that all-time high. But then when you come back to it, it's strong defense. Okay. And that will be the perfect time to buy. Now, if the market does come down here to the green, what is going to be happening? So if it comes down, let's say it comes down to 4,800-ish over the next year or so. Let's say that does happen. What's going to be happening in the media? The media is going to be having all these doomsday scenarios, just like the COVID lows. So the more the doomsday scenarios on the media, the more exaggerated it gets. The more exaggerated it gets, the more bullish or the more excited to buy we should be. So our conviction should go up. We actually need to think like a contrarian, okay? Now, the lower it goes, the more excited and confident we should be. Here's a bit of advice for you, a bit of nuance, which not many, I haven't really heard it before on YouTube. There's two types of investors that understand this knowledge. One is an investor where they understand the knowledge, but when the market goes down internally, they have to say to themselves, hey, Don, like, hey, right now we're getting really scared. Our net worth is down 20%. Everything is frightening. And time is, it could be like a year of losing money. Why are we even showing up to work? Like this is our job. We're saying the stock market's our job. Why are we even showing up to work? Is this the right place? And there's going to be something else in the world that's pumping. Okay. And then you're going to have that feeling of like, oh, should I go to that new hot thing that's out pumping? Right. That's one person. But they then convince themselves, no, the knowledge is the knowledge. Even though I'm feeling a certain way, I'm going to stay by the dip and then hold, and I'm going to be rewarded in the future. I don't know exactly when, but I will be rewarded in the future for controlling my emotions. That is like, I feel like probably 90% of smart investors, especially investors that have been not really in the game for like over a decade. So if they've been in the game for like less than a decade, that's probably how they feel and how they think. I can tell you, myself, I'm in that next category where I've already gone through that. So I'm no longer a smart novice investor. When the market actually goes down like this, that's when I get extremely vocal, especially in my personal life. And I start screaming to friends and family, like, there is nothing to be worried about. This is the time. This is the time to go in because I actually feel nothing. I feel nothing now, right? Sometimes I get questions as well, like, how do you feel managing more than $5 million right now? I feel nothing, man. I feel a great deal of responsibility, and I understand that responsibility. But in terms of like, do I panic? Do I have fear? Because, if you're investing with just 50 grand compared to a million, obviously it amplifies everything. But in my head currently, 50 grand and a million is the same. A million and 5 million is the same. A million and probably 20 million is probably still the same. There comes a point where, yeah, at a certain number, I'm not ready for that yet. And it would start to scare me. I'm not exactly sure what that number is. Maybe if someone flopped $100 million in my hands and they're like, go manage it. I'm like, okay, this is a little bit different. But I can guarantee you right now where I'm at, if someone gave me 100 mil, it's not, I wouldn't feel nowhere nearly as, like my emotions wouldn't change nearly as much as me 5 years ago. with only 100K. So be honest with yourself as an investor. Understand which one are you. I hope you're in the category of understanding. The lower the price goes, the better it is. Keep on buying, right? Buy hard. I hope you're in that category. But then there's a subset of that category, which is what I'm talking about. Join me in that subset where you actually, truly, don't lie, man. Don't lie to yourself. Where you truly actually gain in confidence. The lower it goes on the chart to financial freedom, the more confident you should be. Don't lie to yourself because you are the easiest person to fool. Okay? Remember that. All right. That's pretty much my thoughts on the tariffs. Trumpy, the market's going to be higher. If not, buy the dip. There'll be a new president comes in that's going to go back through the door and reverse all of this. Everything is self-cleaning in the stock market, especially the S&P 500. Think about the psychology. Please, 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 please. Don't act like you're an economist and you know everything, because I never seen a rich economist. Like if the economists could predict everything, they would outperform Warren Buffett. Right? If economists really knew what was going on, they would be compounding at 30% absolute minimum. Right? If you knew all of this, bro, if you knew all of this, what was going to happen with COVID? You'd go long for a month on leverage, then you'd go short. You'd sell your whole portfolio, go short. Then you would buy the dip. You would go leverage long at the lows. No one's moving like that. Follow the money. Follow the money and follow the real world numbers. Okay? The money doesn't lie. I believe if there is an article from an economist, or hey, Trump's fucking thing means this, and they're talking in such a way where they have high conviction, there should be a little thing there that says economist's name. Their compounded results over the last decade is this. Lad, if you ain't beating the S&P 500, why should I listen to you, brother? Why should I listen to you? Or if their skin in the game is, hey, I got 90% of my money in the S&P 500, that's fine. I'm thinking that's a little bit smarter than the guy that thinks he's so smart that he can outperform it. That's smarter than that. But then what does the skin in the game say? The skin in the game proves that he doesn't know what he's talking about, and he's saying he can't outperform the market. So the market's the market. You may as well join it. And yeah, that's right. Most people should do that. But why we're listening? Why we're listening to all this stuff that happens in the news? Right? Why are we paying? Like, it's just a waste of time, man. It's a waste of time. I ain't selling, because even if the market comes down, right? If the market comes down from high to low down here, it's only 22%. It's 22%. Right? It's not worth it, because if you sell out, right? A lot of people are saying, "Oh, sell the stock market. It's gone. The stock market's done. It's over." You sell out, you pay taxes. Then you got to get your timing real right for it to be actually worth it. Okay. So, yeah. Understand where you sit. Understand where is your level of knowledge. Understand who you are, and understand who are these other players, and should we actually listen to what they say. All right. Thank you very much for this video. If you've got any questions you want to do, I'll see you in the next one. Let's go.